How is everyone doing? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. Today, in this episode, I wanted to take a look at private equity. What's going on right now in the private equity market? And to do that, I'm going to take a look at a couple of articles here from S&P Global Market Intelligence. The first article we're going to take a look at here is called Private Equity Deal Value Rises in the Second Quarter of 2024 as Firms Deploy Dry Powder. So global private equity and venture capital deal value surged in the second quarter as investors began deploying more capital after accumulating record high dry powder. Deal value jumped 42% to 175 billion in the second quarter from 123 billion for the same period in 2023. The number of deals, however, declined 7.4% year over year to 3,021 transactions. And there's a number of charts here. I'm not going to get totally in depth in all these things, but this is global private equity and venture capital entries worldwide 2022 through 2024. You could see that in 2022, number of transactions definitely a lot higher. And deal value higher, but it's bouncing back relatively good there. In the first half of the year, deal value increased 24% year over year to 309 billion, while the number of transactions shrank. So deal value coming back a little bit, number of transactions down a little bit. So and then we can see here global private equity and venture capital entries worldwide since 2019. Obviously, 2021 things really took off after everything was shut down for over a year with the pandemic. So obviously things had a huge bounce back in 21, but then we've seen them come down. Investors have started actively putting capital to work using the record high dry powder, capital raised but not yet invested in the system, said Christian Westra, partner in the private equity transaction group at Ropes and Gray. There is a sense that people have been holding on to capital for a lot longer than they would have wanted to or expected to. Private equity and venture capital firms globally held a record 2.62 trillion of total uncommitted capital as of July 10th. Which is a huge number. Westra also attributed the pickup in deal value to lingering expectations that interest rates and cost of capital will decrease later in the year. We're seeing inflation is getting better, and central banks are signaling in a more direct way that they do expect rates to start coming down later this year. So June figures, so total transaction value in June climbed 15% to 41 billion from 35 billion a year earlier. Private equity entries in the US and Canada were up 28% to 17 billion, while deal value in Europe rose 11 billion. In Asia Pacific, deal value fell to 11 billion from 12.83 billion. And then here it just says value of global private equity and venture capital entries worldwide by region. Volume of global private equity and venture capital worldwide by region, monthly deal volume. Let's see here. The technology, media, and telecom sector had the most deal activity with 371 private equity-backed transactions. Within the sector, application software recorded the highest number of transactions at 159, followed by system software with 45 deals and IT consulting and other services with 32. And then let's skip down here, biggest deals, and let's go outlook. So U.S. private equity market is expected to recover quicker than other markets, particularly in Europe, says Ropes and Gray's Westra. The amount of capital available in the U.S. is much bigger relative to Europe. We do have strong guidance that the Federal Reserve is expecting to lower rates later this year. So again, I think good news, deal values are going up, but the number of deals out there is still kind of sluggish as, interest rates, inflation, regulation, other things going on. Obviously, a presidential election year, all these things kind of playing into it. But the good news is it sounds like that there is a lot of what they call in the industry dry powder. So there's a lot of capital, over $2 trillion worth of capital that's sitting there right now, basically waiting to deploy once things are rolling out. And it seems like, IT. So if we look at this chart right here, global private equity and venture capital deals in select TMT industries announced in June. So you can see like application software, big on the thing: systems, software, IT consulting, interactive and media services, technology, hardware, storage and peripherals, semiconductors, electronic equipment and instruments, internet services and infrastructure. And then at the very bottom, you got advertising and interactive home entertainment. So, I mean, obviously, IT, computers, software, hardware. I mean, that's, semiconductors. That's where all the magic is happening right now. So, and then let's go over here. One more article, and we've got private equity exits pacing for 5-year low after slow H1 in 2024. So this is kind of interesting. So private equity exit value is on track to decline to its lowest annual total in at least 5 years, despite signs that the IPO window is reopening. So global private equity exits total 155 billion between January 1st and June 30th, down 26% from 209 billion in the first 6 months of 2023. Annual exit value is on track to fall annually by roughly 1/3 from 2023's 460 billion for full year total. So in other words, what we're seeing here is that deal like we saw in the first half of this article. Now we're seeing the flip side of the equation. So what we're seeing is deals. What are there's a ton of capital sitting there ready to pounce and ready to get deals going, buy deals, but we're seeing that the number of deals is the volume is very compressed. But now here, that's buying companies and putting mergers and acquisitions together. Here's the other end of it. This is companies that private equity has already bought and they're already sitting on, and they're in private equity, they like to get out of deals between basically 5 to 7 years is a typical private equity time frame. They want to buy a company, maximize what they can out of it, and then sell that thing and get out, exit in 5 to 7 years. So we got the entry side, and now we're seeing the exit side of things here. And we're seeing that the exit side right now is not looking so hot. On the buy side, valuations are up a little bit, but deal volume is down. And on the sell side, we're seeing here that the values that are coming out are not so hot. And we can see from this chart here, which is 2019 through 2024, we could see they saw, 19 and 20 were about the same. You saw a big jump up in 2021. Again, just kind of the same chart from the other one with the pandemic. And then it kind of comes back down to earth here a little bit in 2022 and 2023. Interestingly, if you take 2021 out of this, you look at 19, 20, 22, and 23, it's about pretty even. It's not like too crazy there, but then obviously 2024 here, we're seeing, things are a lot lower. Let's see here. The bright spots include signs that the IPO market is reopening after an exit route for private equity and venture capital portfolio companies. The value of private equity-backed IPOs topped 10 billion in both the first and second quarters, the first time that has happened in consecutive quarters in more than 2 years. One area that we've seen a real pickup is the ability to try to exit through public markets. That's good. So persistent uncertainty. So private equity exit value sunk to a 3-year low of 64 billion in the first quarter, but rebounded in the second quarter, rising 40% quarter over quarter to 90 billion. And then we get down here, private equity backed exits by type. In this chart here, and you can see, so you have, secondary buyout, trade sale, IPO, and private placements. And you can see the IPO and private placements for the second quarter of 2024 was about 10%, with trade sales about 32%, and then secondary buyout 44%. So it says here, persistent macroeconomic uncertainty remains a key factor in muted private equity exit activity, making it difficult for buyers and sellers to agree on a fair valuation for a business. Cooling inflation and potential reversal of high interest rates are priming M&A markets for more private equity-backed deal activity, but geopolitical instability and the looming U.S. presidential election are raising big question marks for deal makers. See, would I lie to you guys? Of course I tell you guys what's going on here. We have 2 candidates in the U.S. who couldn't be further apart on fiscal and monetary policy. That's kind of interesting because they say 2 candidates, but are they talking about Biden and Trump, or are they talking about Kamala and Trump? Well, I guess either way, they really are very far apart on fiscal and monetary policy. You really have a night and day comparison there between the two sides in this one. It's pretty clear. You either want one thing or you want the other. Aging investments. So here's an interesting chart here. So this is average buyout holding period for the last 10 years from 2014 to 2024. And you can see here, we're still staying, it's down a little bit. Like in 23, it was 6 years. And now in 2024, it's at 5.7. But like I said, we're still, even if you go back in this chart all the way, like 2014 was like 6.1 years. 15, 6.2, 6.2, 6.2, and then down to 5.8 in 2018, back up 6.1 in 19, and then 5.9, 5.7, 5.6 in 2022, back up to 6. But you're still staying within that band. You're staying in that 5 to 7 year band there. So again, pretty on average, still staying, within that same thing. So the average buyout fund portfolio company investment was 5.7 years old as of July 11th, which means those businesses were acquired in late 2018. Since then, the hurdles to creating growth at portfolio companies have only increased as slower economic growth hampers business performance. The days of financial engineering, buy low, sell high, are long gone. Now all these private equity firms have to actually do things, to create value in the portfolio, and that takes time. I would direct everybody to my series that I did on the Lords of Easy Money. If you have not, if you've not seen that, you really need to read that book to really understand how, in the age of ZIRP and quantitative easing, the Federal Reserve really turned the market on its head. Everything, people had to reach for yield. They had to go out further on the yield curve, meaning that they were willing to take anything down the pike. And really, it was through financial engineering of debt. It was, taking on just tremendous amounts of debt. And that, obviously, with the cost of the debt now, that's not working anymore. So like you said, you can't financial engineer your way to growth anymore. Now you actually have to do stuff, meaning you actually have to have a product and you have to sell something and you have to make something and it has to be good and people have to want to buy it. Traditional business. But anyway, let's get down here. So what does it say here? Trade sales, when a portfolio company is sold to a corporation, often in the same industry, are the holy grail of private equity exits because corporate strategic acquirers tend to pay higher valuations, said Daniel Malone, a Haynes Boone private equity attorney and managing partner of the firm's Denver office. But strategic sales can be slower to close on transactions at private equity firms that are built to churn through deals. The slow deal closing may be one reason exits via secondary transactions spiked to a 10-year high of $44 billion in the second quarter. Fund managers under pressure to exit and return cash to investors are finding the clearest path to an exit leads to another private equity fund. You can get a much quicker and more fluid transaction done with people who are speaking the same language. So again, just very interesting. I wanted to dive in here. I saw these couple articles. I wanted to dive into kind of what was going on with private equity, what's happening in the private equity market right now. And so we can see right there from these two articles, we've got both sides of the equation there. So on the buy side, valuations have ticked up a little bit, which is good. But the deal volume is still way down, obviously. And then obviously on the exit side, exits are on track to have their basically be at the lowest level that they've been at in 5 years. So neither side looking super great right now. However, the good sign is that there is a ton of what they call dry powder. You have over $2 trillion of dry powder sitting there, waiting to get things rolling. If interest rates do start to come down and the economy starts to pick up a little bit, they will, again, there'll be a lot of money there for doing deals, and as things get a little bit better, maybe the exits get a little bit better, and then things start flowing again. So, but we shall see. We shall see what happens there. But like I said, I thought this was really good. Just wanted to get people an update on just kind of what was happening in that private equity world right now. And so there you go. Okay, if you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Please remember we are on YouTube, Rumble, and all major podcast platforms. Please make sure to leave your comments down below, as I always enjoy getting back to everybody. Make sure to check out some of the other content on the channel. I will be posting other episodes this weekend, including the weekly banking update, which is the main show of the channel. So please go check that out if you haven't done so. A lot of great information in those episodes. And I will see everybody again real soon. Thanks a lot.